Robert, how are you positioning your portfolio for 2021?
Thank you for having me on, Sarah. I will tell you, we expect next year to be another good year for the financial markets. And we have three themes that we have developed that are going to guide us for 2021. You know, this year, the economy struggled, but stocks performed strongly. So for next year, we believe actually the opposite will occur and the economy will perform better relative to the stock market. I mean, if you think about it, using the long-term trend of maybe 2% for GDP and historical returns for the stock market of 10%, we think the economy on a relative basis will outperform stocks. And so, you know, as the momentum builds after a slow first quarter, and the economy will probably finish at about maybe 4% GDP, and the likely returns for stocks will be probably near the historical averages. So we still like stocks greater than bonds and cash, and think things will be pretty good. So, you know, our first theme is that the economy outperforms the stock market as the vaccines take hold and customer contact jobs reopen, and spending moves back in that direction as consumers move back to their pre-pandemic lifestyles. I'll tell you, our second theme would be that the art of deal making returns, and that will be that companies will seek out growth in the form of scale and other companies. In doing so, they'll pursue mergers and acquisitions. And interestingly enough, we think this thing will carry on over to Washington in the form of legislation, where the Biden administration, in an effort to gain support for infrastructure spending, will use compromise, and also to gain changes to health care. But our last theme, we think, has the potential to have the biggest impact on the markets next year, and that would be that the fact that the consumer mindset transforms from being homebound to anywhere but home. And so those are the ones we're looking at to be big time changes going forward.
Josh, do you think next year is a year when EPS and individual stock performance gets rewarded much more than the big macro technical themes?
I kind of feel like that was the case this year, but I see that as an interesting argument right now for people to have with themselves, because this market really provides all different sorts of opportunities. There are a lot of people kicking themselves that they missed out on this big macro trend of rates coming down, mortgage rates coming in, and everyone spending tons of money on their homes. Well, now you have Home Depot spending a ton of time over the last 2 weeks at potential support. Does not look great and could absolutely break down technically any day now. If you disagree with that and you want back into that bigger macro trend because you think it has legs into next year, you have a beautiful opportunity in Home Depot. You don't have to buy it at the all-time high. You look at Zoom now, 40% off its all-time high. If you were kicking yourself off all year that you missed that big trend, here's your chance. Go ahead and buy it, half off sale. Wayfair is down 34% from its high. Square is 10% off its high, like that. So you have that opportunity now. If you missed that big macro trend and you want some of the leading names, they're lower, way lower in some cases. If you're not interested in that, playing that game, and you want to own stocks for a 5 and 10-year outlook, and you don't think this pandemic stuff is really going to matter for most of that period of time, you still have opportunities in individual names whose businesses are going to endure beyond this period, and they're not part of this risk on, risk off, work from home, work from anywhere. So, I feel like all of those options are on the table for you right now. You don't have to pay a record high for every stock. That's what's changed. So while the market made a new high today, internally, you have all different sorts of setups depending on what type of investor you are.
Shepard Smith here. Thanks for watching CNBC on YouTube.